about 4 years ago. It'll be 5 years in January. Old National Bank was building a branch out on Sagamore Parkway West. I walked in there. Michael had an office there, and he became my investment advisor. So while I was a little disappointed to hear personally that he was going to be moving, he has a new chapter in his life that is opening up, and he has been giving me excellent investment advice, and I thought it would be wonderful if we as a group heard from him before he left later this year. So with no further introduction, our own member, Michael Hull.
Well, good afternoon, and thank you for allowing me to speak before you today. I'm going to try and keep this as brief as possible because I know we're running out of time. But my speech today is about gold and silver. And I'm going to talk about it in the form of insurance. Most people think of, when you mention gold and silver, you think about it as an investment. And we hardly ever understand or think of it as an insurance policy against all of your other assets. Because other than real assets such as real estate, we all depend upon our IRAs, and we depend upon the money that's in the bank, CDs, and every asset like that, stocks, bonds, those are all paper assets, and it's simply a promise to pay. So, and there's a difference, and I'm going to try to show you the difference between currency and actual money. So, starting off, the first slide, if your critical paper, in reference to full disclosure, I do sell gold and silver investments, so I don't want to get that out of the way. I'm going to try to make this totally educational as possible, but I do sell gold and silver. Okay. If your critical paper assets, like your IRAs, your 401ks, and CDs, things of that nature, if they lost most or all of their value, what would you do? Right, that's what the answer is right now. That's true, that's true. But, so that's a question to ask because, you know, you look around in today's economy, and how many in here have a nagging little feeling that something just ain't right? How many in here have that nagging little feeling? Okay? All right. Because we know, and we're going to show you the debt and all this and that. So, yeah, something just ain't right. And so gold and silver can go a long ways to help eliminate some of that, if you think of it as insurance. Okay? Not necessarily an investment. All right. If I can get this thing to move. Okay. There we go. So the threat is real, and it exists for your crucial paper assets. Traditional assets such as stocks, bonds, and mutual funds are the mainstay of most of all investors' portfolios. However, there are certain periods in all economic cycles where traditional assets have a downturn. Anybody in here remember 2008?
Yes.
Okay. Some people, they haven't even recovered from that yet. Because during that time period, the S&P 500 lost 56% of its value. That's a huge downturn. So some of those corrections are severe. Many Americans whose retirement and bottom line assets that are crucial for their livelihood and family's future are worried today more than ever before about the volatility and the precariousness of the world's financial and monetary markets. Even with the best advisors, using the best investments to fight these risks, most of the advisors use assets that are actually paper promises from a battered U.S. dollar and a $20 trillion indebted federal government that can't stop spending more than the taxes they take in each year. History tells us that not one fiat currency of any nation has ever survived and has always ended up at zero value. A fiat currency is that nation's currency. Okay? That's what that means. Now, paper promise, you know, a lot of people, you can go one of the safest investments are what? U.S. Treasuries, correct? But if you buy U.S. Treasury bonds, bills, or notes, those are all paper promises. Just remember that. Still a promise. Now this little graph shows you how bad our debt is compared to our economy, all the way back since 1795, and what it's projected to be in the next 30-some years. And you can see that war, Civil War, World War I, and World War II, wars are extremely expensive. And how long have we been at war now?
16.
How many years?
16.
We've been fighting in Iraq 17 years, I think. All right? Afghanistan, okay? And who knows what's going on in Korea. So I'm just saying, our debt really suffers when it comes to wars. Now you can see the red there, that's the projected debt of, and we're 20 trillion right now, and that's the projected debt as far as the percentage of our economy is. So you can see it's not a good picture. So as detailed in publications of the Congressional Budget Office, the Brookings Institution, and Princeton University Press, the following are some potential consequences of unchecked government debt. First of all, is we have reduced future national income and living standards. All right, it's going to impact our living standards. Secondly, reductions in spending on government programs. They'll simply have less money to provide for government programs. Higher marginal tax rates. So folks, get ready for higher taxes. How many in here think taxes are real high today? Okay, well, a few of you. But do any of you know what the tax rate, the top tax rate was when President Reagan took office? Anybody want to? 70%. 70%. We are actually historically at low tax rates right now. Okay. But we're hearing in the news that we're looking maybe at a tax cut. I don't know if Congress is going to do it or not. You know, it sells real well, but as far as paying off our debt and being fiscally responsible, tax cut really is not that responsible. Okay? Higher inflation, that increases the size of future budget deficits and decreases the purchasing power of your savings and income. And restricted ability of policymakers to use fiscal policy to respond to unexpected challenges, such as economic downturns, or international crises, or hurricanes. Okay? They just passed, what, an $8 billion package for Harvey? Now we've got Irma coming. Okay? So our debt gets in the way of this stuff. Number 6, losses for mutual funds, pension funds, insurance companies, banks, and other holders of federal debt. So if you look at your IRA investments and the things that you have, and when you look in the bond section, a lot of times the more conservative you are invested, the higher percentage of government bonds you'll have. Okay? And a bond, the government bonds are our national debt. Okay? All right. And lastly, increased probability of fiscal crisis, in which investors would lose confidence in the government's ability to manage its own budget, and the government would be forced then to pay much more to borrow money, or in other words, interest rates would have to go up to entice you to buy those. Now, here we can see 3 front pages. Of course, we're all familiar with the 1929 stock market crash. That started the Great Depression, which lasted 78 months. A continual downward trend for 78 months. The stock market lost, I think it was 82% of its value over that time period. Then, does anybody remember 1987 in October when we had a 22% drop in the market in one day? Anybody remember that happening? If that happened today, that'd be a 5,000 point drop in the Dow Jones, percentage-wise. A 5,000 point drop. And it's already happened once in the past. So just talking about the risk here. And then, of course, we got 2008, where I'd already said that the S&P 500 lost about 56% of its value during that time period. Okay? So crises do happen. Now, in past history, stocks became worthless when their companies went bankrupt. Currencies became worthless when countries either defaulted on their debt or inflation ran rampant. But in the entire recorded history of civilized mankind, gold or silver never ever were valued at zero. Gold and silver has intrinsic value. That brings a point where we're getting ready to move down to Texas, so we're boxing up stuff at the house. And I ran across a spoon the other day. You know those little collector spoons that you see in gift stores when you're traveling? Well, we happened to have one, and it looked ugly. Man, it was all black, and it just looked bad. And so I'm looking at that, and Mary Alice says, "Is that any good?" Well, you know what? I turned that over, and there at the bottom of the handle of that spoon was forged sterling. So even though it was ugly looking, guess what I said to her? Can't throw that away. It's silver. See, silver and gold never gets thrown away. You know, some of you that have gold on today, some of that gold might be all the way back from the ancient Egyptians who were the first to use it. Okay? Gold and silver has intrinsic value. It's one thing currency doesn't have. Money and currency have 7 characteristics that make money what it is and make currencies what it is. And the big difference between gold and silver and currency is there's no intrinsic value in paper money. It's always just a promise. Okay? The critical question, gold and silver are the real forms of money. Currency was developed to make transfers and payments more convenient. When currencies are decoupled from their precious metal backing, the fiscal strength and promise to pay by the issuer is the only guarantee. Critical question, what happens if dollars are no longer accepted as payment by other countries and they refuse to buy our treasury bonds? And that's already happening. You know, the US dollar used to be the world currency. When you bought commodities all throughout the world, it always had to be traded in dollars. That's no longer the case. There are many countries now that are banding together trading in their own currencies, like Russia and China, and they're using the euro as a world currency also. So the US dollar is losing its appeal. And more importantly, what happens, so as the dollar continues to decline, if that's the case, how does that affect your pension plans, your retirement funds, your saving accounts? How do you protect your assets? Now here's a key point. How many in here have homeowners insurance? Okay? Car insurance. Okay. You have insurance on your house, your car, your health, and your life. But have you ever really considered insuring your paper money? Okay? Start thinking, the thing that I'd like to drive home today is start thinking of gold insurance in these precarious times as insurance against your other have-to-have investments. Bottom line investments. Okay? Now, Sam, you were about maybe 2 back then, 2 or 3, 1920. Do you remember that?
Not well.
Not well. Okay. All right. Well, here's a little slide that shows a different. This one and the next one shows the difference between real money versus paper money. Back in 1920, that's a $20 gold piece, which was 1 ounce of gold. So it was worth $20 back then. And the currency back then were gold and silver notes. And this shows a $20 gold note that back then, a bearer of that $20 currency could walk into a bank and come out with a $20 gold piece, because that was a bearer. In other words, that's kind of like a claim check. How many in here, you know, we all get claim checks from the dry cleaners, right? You take your clothing to the dry cleaner, give it to them. The clothing has value. What does the dry cleaner give you? A claim check. Okay? And that claim check represents the value. You know, when they're done working on your clothing, you can take that claim check back and get your clothing back, right? So currency backed by gold or silver actually acts as a claim check. Okay, everybody follow that? So in 1920, a $20 gold piece was equal in purchasing power to a $20 bill. And it was redeemable to the bearer in gold coin. Look at it today. Today's gold price, I checked before I left, gold right now is at around $1880. Excuse me, this was 2 days ago I checked. Gold was at $1,318. And so this is pretty close. Real money versus paper money today, that in 2017, the same $20 gold piece of gold, that never changed, 1 ounce of gold, is equal in purchasing power to 66 $20 bills. And that totals about $1,320. The $20 bill is now a promise to pay, IOU. It's a promise to pay without any tangible backing whatsoever. Okay? God bless you. So, like US dollars have value only to the extent that they are strictly limited in supply. However, the US government has a technology called a printing press. We all know the term quantitative easing. Is that term familiar with some of us? They printed all that money. Is over $2 trillion that the Fed has printed so far using that. It allows to produce as many US dollars as it wishes at essentially no cost. When Franklin Roosevelt abandoned the gold standard and its financial discipline for the debt standard, there have been 11 successive administrations that pushed the debt standard to the limits of its viability. You know, when you hear them talking about whether or not they're going to increase the debt, that's actually a joke. Because they have to. They absolutely have to. They can't stop. Okay? The effect of these policies has been a slow motion destruction of the US dollar purchasing power since the gold standard was abandoned in 1933. Now this graph shows that. All the way to the left is value axis. Started in 1913 is when the Federal Reserve was created. Does anybody in here know what else happened in 1913?
Income tax.
Gail.
Cars were the assembly line in Detroit.
Yeah, okay, cars were, yeah, okay, I don't know when the assembly line started. Maybe it was around 1913. But somebody had it.
Income tax.
Income tax, that's correct. All right. Also, let's see, income tax, the IRS was formed. Okay. And we can see that war is expensive. You'll see it started in 1913, how the value dropped of the dollar till about the end of the war, 1918. Then it started coming back. And in 1933, FDR made it illegal for Americans to own gold. In other words, if you had gold in your lockbox in a bank, the banks went through their lockboxes and opened them all up, and if there was any gold or silver in there, the government gave them paper money instead and took the gold and silver. All right? So they took us off the gold standard in 1933. In 1944, the Bretton Woods established that US dollar was the world's reserve currency. That's where it was when I said that back in past years, you had to deal with commodities in US dollars. That was because of the Bretton Woods situation. Then in 1971, Nixon closed the gold window because even though it was illegal for us as citizens to own gold and silver, other nations could turn in American dollars for gold and silver. And they were doing that. And that comes all the way back from World War II. You know, we got a late start in World War I. We weren't there that long. We also got a late start in World War II. So for the first parts of both those wars, a lot of countries traded for our commodities because they were building guns and tanks and everything. And so they were buying butter and commodities from us for gold. So both those wars made America very rich in gold. And over the years, some of these countries were buying back their gold until a point in 1971 we ran a risk of running out of gold. You know, is anybody for sure there's some gold at Fort Knox still? And I think the last time it was counted was in the 1950s. Okay? So anyway, we can see how the dollar really has deteriorated. It's worth about a nickel. And that was in 2013. Okay? Now, so the answer really is, folks, start considering using gold and silver as part of your overall portfolio. You see that shopping cart there? That's full of your stocks, your bonds, your mutual funds, okay, your TIA craft, things of those nature. But that's all on paper. They're all promises. So with some gold and silver bullion, and bullion isn't just bars, bullion are coins like you see there. Today, when I sell gold and silver bullion to folks, they're purchasing coins, like 1 ounce silver dollars. 1 ounce, they're not silver dollars, just 1 ounce, and they look like silver dollars though. And then the 1 ounce gold pieces look like $20 gold pieces. But it doesn't say $1 or $20. All right? So, adding a little gold and silver to your overall assets provides you some safety. Now, of course, no one investment is generally suitable to meet all of your needs, so a diversified portfolio and ownership of assets can greatly ease your mind. You should carefully review your individual requirements and develop a plan to provide for your personal needs. Now, many financial experts recommend, and this also comes from the College for Financial Planning, of which I'm a graduate of. I'm a certified financial planner. But they recommend to include 10 to 15% of your your overall assets in physical precious metal assets. Now, did any of you know that you can actually own gold and silver in your own IRAs? Did any of you know that?
Yeah.
You can do that. For those of you that don't know that, you can. So an example, if this scenario is suggested as prudence, then let's say you had a $100,000 IRA, it would be very prudent for you to consider setting up what's called a direct IRA for $10,000 to $15,000 of that IRA and create your own direct IRA and hold that in gold and silver. You can do that. Just a thought. And then that protects the rest of that IRA. Now, the gold dealer that I work with is called Investors Rare Coin and Bullion Service, IRCBS. They're independent, and they don't market to the general public at large. In other words, I don't market to the general public at large. I do not employ telemarketers. We work strictly through bank trust officers, estate attorneys, and qualified financial advisors. The gentleman that owns this company I've known for about 35 years. He's a retired Army officer, and he's a past president of U.S. Tangible, which is the largest is the company with the largest number of rare and gold coin assets in the world. And he put together rare coin portfolios for thousands of people while he was with that company. And so he decided to semi-retire, and he set up his own company. And I give you a little education on how gold and silver is bought and sold in this country. The U.S. government every day, a business day at 8 in the morning, sets the spot price for gold. And it's usually the closing price of the previous day. Now, when gold is mined out of the ground or panned out of the ground, you know, they have to sell it. They take it to the assay office to sell the gold and silver. Well, that means they're taking it to the government. The U.S. government buys all gold and silver. So they'll the spot price will be for that day, plus the U.S. government's going to take a small percentage fee for that. Then the U.S. government takes that raw gold, gold dust, gold nuggets, and gives it to their where they print the gold and silver, and the U.S. government charges a fee for that. Then the mint, after they've made the gold and silver coins or bullion, they turn around and they sell it to what's called Tier 1 dealers. And that's similar to like the Federal Reserve only deals with the top tier banks in this country. They only deal with about 6 or 7 large major banks. And then those banks then let the money filter down to the smaller banks. Well, Tier 1 dealers buys it straight from the mint. Then they turn around and they sell it to Tier 2 dealers. And those are the guys like you see on TV. How many of you have seen the gold and silver commercials where they're trying to sell you? Yeah. That's a Tier 2 dealer. Well, my guy, Barney, call him, he is a Tier 2 dealer, so he buys it at about 6%, he buys it at about 3% above spot price. Now, if he only deals with people like me, like you folks couldn't go to him and buy any gold and silver from him. You have to be recommended from a financial advisor like myself, or an estate planning attorney, or a bank trust officer. His overhead is Zippo. So we can offer gold and silver at very, very excellent prices. Oops, I apologize. I wasn't supposed to say that. So when's the best time? When's the best time to get your insurance? Well, how many people down there in Harvey wish they had flood insurance down there in Texas? About 80% don't have any flood insurance. So when you need it is not the time to buy it. Okay, after you've already had a loss. So that's the point in what I'm saying is diversify, insure your paper assets with one commodity accepted worldwide, and it'll be your safety net for the future. Now's the time to think about it. So that's pretty much it. We do the IRAs. We do appraisals. If any of you already have coin portfolios, we can appraise those for you and then give you updates on the values. So that's about it. Do we have
We have time for 1 or 2 questions, and then obviously Michael will be available after we close.
Yeah. Yeah. Okay, any questions out there? Yes, Camilla?
Should I keep paying the bank for my safety deposit box that has all those silver dollars in there that came down from great-grandfather?
Well, they already...
Hundreds in your mattress, too.
Well, they already went into the boxes one time in our history, in 1933. So, you know, I can't say that they're going to do it again. But if you don't want them or anyone knowing what you have, that's the reason why you should get a safe. You know, I have a safe. Okay? Okay? Any other questions? Yes, ma'am.
You told us what an ounce of gold is worth. How about an ounce of silver?
An ounce of silver is worth $17.60, I think it was today. Now, in fact, silver is a better buy. The ratio between gold and silver found naturally in Earth is 16 to 1. There's 16 times more silver than gold. But the price difference between gold and silver today is at 75 to 1. So silver actually is undervalued. Most experts say silver is the best place to keep some money in right now, if you're wanting to try to buy your insurance policy at the cheapest price.
Okay, well, I want to thank Mike for his time and the information. And also want to say, we've learned about gold, we've learned about silver, but to be an active member of Kiwanis, priceless.